India has immense potential. It is the most populous country in the world, has a large domestic market, and could potentially become one of the top global economies. Yet, it has not realized this potential. The country lacks long-term vision, has not focused on creating sufficient jobs, and has historically neglected support for small and medium enterprises, SMEs and MSMEs. Meanwhile, neighboring countries with smaller populations are growing faster by building efficient systems and fostering entrepreneurship. Despite having a vast workforce, India has not generated enough employment opportunities. For example, the country enjoyed a period of stable petrol prices at around 103 Indian rupees per litre when global crude oil prices ranged from $45 to $60 per barrel. Meanwhile, taxation is excessive. Direct income taxes, CGST, SGST, and layered taxes, yet the revenue is primarily spent on government salaries rather than on infrastructure or productivity improvements. Bureaucrats often demand bribes, lack accountability, and delay work unnecessarily. A task that could take minutes may take weeks, and the system provides no incentives to improve efficiency or transparency. Complaints are largely ignored, and the system protects its employees rather than citizens, even extending sympathy in courts toward bureaucrats' personal circumstances rather than public welfare. Red tape and bureaucracy significantly hinder development. Individuals attempting legal business initiatives face unreasonable licensing demands, fines, and penalties that are often impossible to meet without additional expenditures. Policies to encourage ease of doing business, for both domestic and foreign investors, are insufficient, discouraging investment. India missed opportunities to invest in petroleum reserves, often making poor investment decisions and continuously taxing investors in stock markets and mutual funds. The economy thrives on taxation rather than building a strong ecosystem for growth. Political corruption compounds the problem. Many politicians prioritize personal wealth accumulation over national development, amassing vast assets, often stashed overseas, rather than implementing strategic policies to grow the economy. Foreign companies leaving China have often chosen ASEAN countries over India due to a lack of investor-friendly policies and ease of doing business. Similarly, import policies are restrictive and penalize businesses, discouraging imports and innovation. During crises such as COVID-19, corporate tax relief was provided to large companies with the assumption of reinvestment, but profits were retained rather than used to stimulate growth. Meanwhile, SMEs and MSMEs struggled, many going out of business. India has also underinvested in research and development, relying heavily on imports for oil, gold, machinery, and defense equipment, while failing to develop export-oriented industries. Unlike China, India has not leveraged its population size to meet global demand or create a robust trade surplus. India's young population remains underutilized. Many work in low-paying, low-productivity jobs, while others remain idle. Western economies provide better work-life balance and job security, but in India, jobs are the first to be cut during a recession due to weak labor protections. Rising inflation and oil price shocks disproportionately impact the middle class, further limiting economic mobility. In summary, India suffers from a lack of long-term vision, ineffective bureaucratic systems, insufficient support for entrepreneurship, underutilization of its youth, and political corruption. Despite its potential and resources, the country has often acted like a small economy, mismanaging funds and opportunities that could have propelled it to global leadership. Join the community, subscribe and click the bell icon for updates.